the tech job engine continues to change the Silicon Valley landscape. In order to facilitate all of this expansion, we need to begin building for the next tech migration. Let's speak with the thought leaders who are betting on the future of Silicon Valley. Silicon Valley Commercial Real Estate Fireside Chat Series.
Hi, I'm Erik Hayden, the founder of Urban Catalyst. Welcome back to our Fireside Chat series. I'm here with Tom Tognoli, the founder of Intero Real Estate. Welcome.
Thanks, Erik. Glad to be here.
So after looking into your background and your history, I found a lot of similarities in my life, which I found is very interesting. You talk about an epiphany that you had that made you want to focus and change your life and start Intero Real Estate. Can you tell us about that?
Well, yeah. So, I think it's something that, a lot of people probably go through. Some are lucky enough to go through it in their 20s. Most people probably never go through it, I think, unfortunately. But when I was in my mid-30s, I had kids. Life, I was just kind of, I would say just kind of blowing with the wind, we'll just say, and I finally at that point decided that, I needed to kind of grab life by the horns and take control of it. And, just really kind of reprioritize the things that were important to me in my life and how I wanted to live kind of the rest of my life, really, and what were the priorities that were going to be most important to me. And as you and I had talked before we started filming, I talk a lot about F5, and it's, matter of fact, my license plate says high F5, so high five. And so what F5 means is, going to a lot of seminars and things like that, in the professional business. A lot of people talk about equity in your life and having balance, and a lot of people talk about putting balance in equal shares in all the equities of your life. And I kind of always thought that life was more like a pyramid and that things needed to be built on a foundation of faith. And so, if you look at your F5 like this with faith on the bottom, then it's your family, then it's your friends, and then it's your health and fitness, and last it's making money. And what I found being a leader and leading people and coaching people and managing people was most of the things that were holding people back from being successful wasn't really their job. It was like everybody thinks they're so focused on their job because we spend the majority of our waking hours doing our job. But what I found was what was holding most people back was something else going on in their life that they weren't completely satisfied and happy with. It may have been, health and fitness is obviously a huge one for me and for everybody. We all struggle with it, and you and I were just talking about it again before. Hey, I didn't get a workout in last week, and it's nagging on you, And so I think that if you can really, and again, as you and I were talking, they're always all screwed up. Hey, you wish the pyramid was perfect all the time, and foundation, faith was the foundation, but our priorities are always getting screwed up, and that's how come every day I try and find a portion of my time every day just to really focus in on making sure that my priorities are right, realigning myself with what I need to do for my life. And ultimately, I know that if I focus on my faith, my family, my friends, my health and fitness, and I'm fortunately in a position now, that I don't need to be urgently chasing money, the right opportunities will present themselves if I just continue to focus on that stuff, which is kind of how we even connected with you, to be honest. I mean, how I connected with Urban Catalyst was just through relationships and through just connecting with people and talking about good stuff, and that's how I got connected with you.
And we were really happy to connect with you.
Yeah.
As I mentioned, you're a very fascinating person, and we really like your, call it, guidance and counsel and a lot of the ideas that we had. So I would tell you a little bit about how my background really, how it seemed to have how my background had a lot of similarities with yours. About, call it 18 months ago, I was working for a large international development corporation. I was the president. I was doing one of the largest development projects in the Bay Area. It seemed like I had it all together, but at the same time, I felt like I need something more. This isn't it. This isn't what life is about.
Or there's a disconnect between sometimes, I think, what perception and reality, and there's always, for me, there was always like this perception of what everybody always thought Tom was, and then what Tom really felt like he was on the inside.
Right.
And I was trying to find that alignment.
That's exactly.
And now I have an alignment. Like I'm authentic, and it's like it is what you see is what you get, whether you love me or hate me. It is what it is, and I'm just gonna be authentic, and I'm not gonna let these two lives, who I want to be and who I am, tug at each other. Just go with it and be the best you can.
And really, that was what started Urban Catalyst. I felt like I was struck with a bolt of lightning. Like suddenly my mind opened up and I went, this is what is possible in life. I can do my job, I can be impactful in my industry, but I can also do something that really benefits the community. And also, like you said, and finance, that just comes along with it. It isn't the focus.
No, you guys are doing some great work in San Jose. And I mean, that's, when I heard what you guys were doing, that's how come I just got so excited about it. I got excited for a number of reasons, as I was, again, telling somebody I was meeting with before you. Number one, I'm already doing real estate development anyway in the Bay Area and Silicon Valley, and I'm a bull for the Valley, and I've always been. There's always going to be ups and downs in the housing market and the real estate market. That's just life. But long term, I've always been very optimistic about the long term, and it's served me well, right? I bought real estate and I've held it, and it's always worked well for me. You combine that with the op zone stuff that you guys do, and then you compound it with the fact that you're getting the benefit of the development. So you're getting Silicon Valley real estate, op zone benefits, and you're ultimately getting the benefit of being the developer, which there's equity that comes with that as well. So to me, it's just, I'm a fan.
So you've been a real estate expert and a native growing up here in Silicon Valley.
Yep.
Can you tell us a little bit about what you think or how the real estate market has evolved over the last 10, 15 years and where you see it going?
Yeah, I know for everybody it's hard to wrap your head around values in the Valley. It's just, it is. It's a hard thing to wrap your head around, especially if you're not from here, and having lived here your whole life. But when you take into consideration, this is really the brains of technology for the planet, the entire planet Earth. And in many ways, when you think about, those brains, you think of Google, Facebook, Apple, you name it, Adobe, all of the companies and more. That's just the tip of the iceberg, and they're all here. And they've all made a huge long-term commitment to this place we're fortunate enough to be called home, right? Silicon Valley. And I don't think that organizations like them make investments in markets hastily. They've done their research. They're into this for the long haul. So I certainly think there's going to be ebbs and flows in the market like there always is. And I just don't think I think you got to not pay attention to that. You pay attention so much to the noise of the ups and downs. It's like watching the stock market every day. You're just going to go crazy. Mm-hmm. You have to just be a long-term investor. And if you are, Silicon Valley is going to treat you well, and as I always tell everybody, I don't think you're ever going to, get rich at your job unless you're really lucky. IPOs, and there are a lot of people in the Valley that are, but if you want to get slow rich, you got to do it in real estate by taking the money that you make, investing it wisely, and then parlaying it. And again, what I like about you guys is one of the hard parts for a lot of people with Silicon Valley real estate, especially once they've already bought their primary residence, is how do you come up with enough capital to be able to put money into investment real estate, without you maybe need to come up with $1 million or $2 million or $3 million to significantly move the needle on your own personal net worth. But most people don't have that kind of capital, and so, I think, again, this is a nice way to be able to diversify your portfolio. And
so
put it in the...
two things I think about when you just described all of that. The first is the 10-year hold period for opportunity zone funds. That's that long-term play in real estate you're talking about. And then it's there are so many folks in Silicon Valley that make $300,000, $400,000, $500,000 a year. But just like you said, how do you take that excess cash and put it into a real estate opportunity that's going to make money over the long term? And
tax efficiently.
And tax efficiently, of course. But I guess my point is there are so many folks that have that kind of income level. What I've found is there's a lot of cap rate compression. You don't get as good returns on the investments that are at that lower level. Like say anything under $10 million, there's just so many folks that want to diversify into real estate trying to get that property ends up not being the best. And so one of the big benefits at Urban Catalyst, of course, is we can go well above that threshold. And getting above that threshold, that's where you can find the deals.
You get the economies of scale, everything just starts to, when you start operating on volume, it's just and higher price point. There's more value there, right? It is. So I know it makes a lot of sense.
So we talked about Silicon Valley. let's talk a little bit more about downtown San Jose.
Okay.
What is making downtown San Jose so hot right now for real estate?
Well, I mean, I think that unfortunately the Bay Area either didn't anticipate, when my family moved here in 1965, I was just I'm barely born, 1965. I mean, it was apricot and cherry orchards, and it wasn't really. I don't even know that they called it Silicon Valley back then. They
called it the Valley of Heart's Delight.
Valley of Heart's Delight. Well, I was Santa Clara County, Valley of Heart's Delight, which I love, and so they obviously didn't put the infrastructure in place to, manage what we now have, and they're trying to figure that out. But I do think that now that Google's coming into downtown, Adobe's building the building right next door to us here, and all the other stuff that's happening down here, and the commitment to making downtown San Jose finally the hub that it needs to be to get people in and out of here, to keep the economy thriving. San Jose's kind of had its we'll call it starts and stops over the years, and I mean, I know a lot of people. There's been probably 2 or 3 times over my career where I've heard people like, "This is it. San Jose is finally gonna go. It's something big's gonna happen in San Jose," and it just seems to always, for whatever reason, not really happen. But now with what's happening in high tech, I think the whole landscape of this valley, some aren't gonna love it, some are gonna love it, but I think there's a huge opportunity in downtown San Jose, especially long term.
I mean, we obviously agree with you, as all 7 of our properties that we've identified.
Well, that's what I love about it. Are in San Jose. I mean, and we know there's op-zone funds. I have friends that have invested in op-zone funds around the country, but some of them are too diversified. They're too spread out around the country, or sometimes there are markets that I don't understand and know. Not that they're not good, but I like San Jose. I like op-zone. I like Silicon Valley. I like the fact that we're developers. I like the fact that you're helping the community with a lot of what they need. I think it's a home run.
So what we really see as the difference when you say San Jose's had some starts and stops, which it has over the years, and what makes this time different? In our opinion, what makes this time different is we look at, and this is from an office perspective, you talked about the large tech tenants. When we see Mountain View, Palo Alto is sort of the center of the Silicon Valley universe. And as the large companies have gotten bigger and bigger and bigger, they've just been slowly progressing south. They've been leasing all the office space, developing all the potential office properties, and now they're out of space. And really, what's next? And what's next we see is downtown San Jose.
I agree.
It's a built urban environment. It has the infrastructure and the transit in place. And of course, Google coming in, spending $400 million on property in the last 12 months. J. Paul, large office developer, coming in, dropping $650 million on property in downtown in the past 6 months. We really see ourselves, this is it. This is the time for San Jose. We're here on the ground floor, and that's why we started Urban Catalyst.
Yeah, no, and I like that you're not, a lot of the stuff I do, we do some development stuff that's quick and some that's short, and the short-term stuff, I sometimes look at it more speculative. Like when I buy a house and I'm going to either develop it or fix it, and you're going to do it in 6 to 24 months, that's more like speculation. But now you're talking about a 10-year window. To me, that's a long-term investment, and that's I don't think people need to get hung up on, I almost said don't get hung up on trying to time it. You're not going to time it. I bought my first house in October of 1989 in Sunnyvale for $235,000, at the top of the market. October 1989, stock market crash, earthquake. What else happened? Savings and loan crisis was happening in the 90s. I bought my house at the peak of the market. That was, 30 years ago today. That $235,000 house. I don't own it now. I've since sold it, and that same $235,000 house today is probably worth $1.7 million.
Wow.
30 years later. Now, here's the crazy thing. When I bought it for $235,000 in 1989, I owed more on it than it was worth from 1989 to 1995.
Wow. Because
the market was so flat during that early time of the 90s. But again, I sold it 10 years later for twice what I paid for it, and that was what got me into my next house. So it's that 10-year window, which is what I love.
And there's the American dream right there.
Yeah, but you have to be in it for my whole point is, if I had to be out of it in 2 or 3 years, I would have been crushed. But I didn't. I was able to help the parents because I was a kid back then. I was 20-something years old. But fortunately, I was able to hang on and ride through it. And at the end of the day, if you are able to get through the ups and downs, you're always, I think, you just can't have to sell.
Mm-hmm. And as a part of our fund, we have to season all of our funds for 10 years before we liquidate our assets and return money to our investors tax-free.
Yep.
But as you said, not having to sell, we don't have to sell year 10 in one day. If there's a recession at that time, like what you're describing, we can hold for an additional couple years really to maximize the profit for our investors.
I mean, I think it's, that's the nice part. That's the other nice part when you have investments that are generating positive cash flow and not burning capital.
Exactly.
Now, I know in the beginning as you're developing once you get these things built and seasoned, and I know you're going to restructure debt and all those other things that you guys are talking about doing when the time comes. I know because I own both kinds. I own buildings that burn, and I'm in them for long-term appreciation. And sometimes but I own buildings that cash flow. When you have the cash flow, it's you can sustain.
Cool. So we have a lot of investors from around the country, but we do have a significant amount of investors that are local here.
Yeah.
Can you tell me about your feelings about local investment?
You're talking about specifically from the standpoint of having local people investing back into the community. Well, certainly I think people that live here, when they put their, you're invested not only financially but emotionally within the community, and invested into, everything here. You're not, you put your money remotely in a different part of the country. It's like you don't really have an impact on the local community. You're not involved. You're not going to local restaurants. You're not volunteering, you're not donating money, you're not doing all those other things. So I think it's super important that we have a lot of the local people here and also people that are championing it.
Talk a little bit more about blogs.
Yes.
So it seems that you had sort of almost like a self-help blog that now has turned into a business blog.
Kind of, yeah.
But what words would you want me to say instead of self-help blog?
I do hate that, so I've struggled.
I knew you'd hate it. That's why I hate.
I don't like the word coaching. I don't like, but because they're kind of just the words you always hear out there. I started the inspirational blog. Really, it started with just like probably 20 people, 15, 20 years ago, and I was running a sales office, and I was just trying to inspire people, and people wanted to get added to it. And over years, it just grew and grew and grew and grew. And
you have over 20,000
over 20,000 people on that blog that are everything from, and it's as diverse a group as you can. It's international, people from all over the world that are on the blog, all over the country, kids in school, to CEOs of corporations, to venture capitalists, to engineers, you name it, everybody's on there, realtors. Obviously, tons of realtors are on there.
Sure.
I mean, that was a big part of it. But really, I use it in the beginning as a way to kind of try to communicate that whole F5 message. I guess when I first started, that really wasn't it, because I don't think I even had F5 at the time. But really, just a way to kind of communicate a message of inspiration, of support, emotional support, kind of getting people going, right? So I literally have been writing that every week for over 15 years. So I mean, whatever the numbers, 500 blog posts that I've done. And then, with my departure from Intero back earlier this year, where my primary focus had always been on my team of employees that were working for me, keeping them inspired and motivated, and also, friends, family, other people. But I really wanted to kind of now focus it more on, okay, how can I now really just try and help communicate, all the opportunities and things that are available to people here, not only in the Valley, but really around the country, around the world. And so that's how come I've been highlighting. Obviously, I highlighted Urban Catalyst. I've highlighted some of the other small startups that I'm in, just other cool stuff I hear out there that I just think people might need to take advantage of.
And so that'll be the new focus moving forward, is more business oriented, but also have a little bit of
I
what
think
was
I'll probably
before.
recirculate more of my old stuff that I've written. I don't need to continue to write fresh stuff as much as I did, although I'll do it when I feel called to do it, but I'll spend more time on the insight stuff, helping guys like you and other people. One of the things I tell people, kind of my thing is, when AI is not enough, call me. It's like when you need to talk to somebody who really knows what's going on in this valley, knows the people, knows the players, knows the locations, knows everything, call me. I don't have all the answers, but fortunately, having lived here all my life, I know people who have the answers, right? Hence, I came to you and Josh, or I've gone to Bridge Bank, or I'll go to First Republic Bank, or I'll go wherever, right? All these different people that I have relationships with, so I can just be kind of a good funnel again. It doesn't matter if you need a gardener. Literally. I mean, people moved in across the street from me. I went and set them up with a gardener because they didn't know. They were new to the area, don't know what to do, but I know. I take care of it all to, hey, if people are looking to invest in real estate and diversifying their portfolio, I can tee them up with guys like you and that I've vetted a little bit and trust and respect and just try and tee up more opportunities like that through providing value and information.
So who in your local network would you advise to invest with Urban Catalyst?
I think there's a lot of people, I think especially people that don't have the time to manage your own real estate, number one. I mean, it's a lot of work. People don't realize you're just buying a rental property and renting it out. That's one thing, renting a house or condo. But if you've got a full-time job, being a real estate developer, I can tell you right now, it's like, people say, what do you do? I kind of say I'm retired, but really I'm a real estate developer, even though I never called myself that, but that's really what I am because it's a full-time job. Not just doing the activity, but thinking about it. There's so much strategy, and I mean, you literally, I might find myself sitting there for hours, just reading, thinking.
You're speaking my language here.
And it's because it's complicated, and if you're not eating, sleeping, and drinking it every single day, but you have capital, you want to diversify your portfolio. Maybe you're heavily invested in the stock market. You want to diversify out the stock market, but you want a tax-efficient way to do it. You want to invest in real estate. You want to invest in Silicon Valley. I mean, this is a great way to do it, to give some money to people that are local in a market that and you don't have to think about it anymore. Just let it do its thing. Let you guys worry about it. Give them their quarterly checkup or whatever you're going to do. Give them an update on what's going on and treat it like just a long-term, any long-term investment, and just they don't have to deal with it.
So kind of going back a little bit, what really is interesting to me is as a founder of a real estate company, what made you decide, how did you know to start Intero? How did you say, I'm going to do this?
Very similar to your situation. It was very similar. I mean, there had been massive consolidation. We were running big real estate companies had all been going to get acquired. There was massive consolidation. There was an opportunity for us to start a company back in 2002. I mean, again, the planets all aligned, and again, part of it was divine intervention. We were just right place, right time, and it was the real estate industry, for lack of a better word, had become very corporate, and not we're kind of Silicon Valley guys, born in a garage. That's kind of our, we're scrappers, and that's and just to go show up to work every day and grind through, doing what we were doing was fine. But it really just wasn't fueling our juices. We wanted to go out and have an impact on the community. We wanted to impact on people, impact on buyers and sellers. Our foundation has helped so many nonprofits that help children in need. I mean, we did all these other cool things that we never would have been able to do had we not started Intero. I wish I could say there was this epiphany moment, like there was this the star that said we should start. It really wasn't. It was just camaraderie, a bunch of people that all we were young, a little like you have a lot, and it was there's got to be more. There's got to be more, and the more was Intero, and at the end of the day, it wasn't easy. We made it through 2008 and 2009, and almost lost it all. Literally, almost refinanced our parents' houses to make payroll. You name it, we did it. But that which does not kill you makes you stronger. At the end of the day, it ended up opening up just so many opportunities for things even other than real estate.
So then after your massive success at Intero, you decided to exit. What prompted that decision?
It was just time for me to go off and do something else. It had been 5 years. When we started Intero, we had an angel investor originally that provided us the capital to start the company. And then myself and my 3 partners decided to buy the angel investors out in 2007. If you wanted to pick the absolute worst day in the world to buy a real estate company, it was the day that we bought Intero. We survived through the recession. We made it out of it barely, and we were starting to fill back in the hole that we had basically blown up in 2008 and 2009. And the opportunity, presented itself to us to sell our company to Berkshire Hathaway in 2012. Is that right? Yeah, I think it was 2012, 2014, 2014, excuse me. And it was just like, it was one of those opportunities we couldn't refuse. I mean, all everything had aligned it up perfect. And so that was 5 years ago. 5 years, had kind of passed. My kids my youngest went off to college. My oldest son, Tommy's in the real estate business with Intero, working with one of my good buddies. And just felt like it was an opportunity for me to go out and pursue other things, my F5 stuff, try and figure. I know there's something else out there for me. I'm not sure exactly what it is. And maybe it's just helping guys like you and trying to take what I've learned over the, all my struggles, because like I tell everybody, it's like nobody has it all figured out. Whenever I talk to everybody, I tell everybody, it's like, let me preface it all with I'm broken, I'm screwed up, and I don't have it all figured out. But I'm on a journey, at least I have 30 years head start, and so I can try and share some of that experience with people.
Well, we appreciate you sharing with us today.
Yeah, no, my pleasure. I'm happy to do it. Really like what you guys are doing. I like you guys are local. And this is your hood, so I'm on board. Yeah.
So, Tom, tell me, 1031 exchange for the last 25 years has been the go-to mechanism to defer capital gains taxes. Now we have opportunity zone funds like us. How do opportunity zone funds fit into that spectrum?
Again, I think, especially if people have built up a lot of equity, in their investments, and a lot of times when people have built up a lot of equity in their investments, sometimes they're also towards the end of their careers, or because it's taken them a long time to build up that equity. I think it's it's just a good alternative, to the 1031 exchange for all the reasons that we talked about a little bit earlier. It's just it's more hands off. Like I told you before, I own 8-unit apartment building that I'm renovating in Redwood City with some partners. We're building a house. But, doing all those exchanges, it's a lot of work. It's complicated. There's a lot of liability, a lot of risk, and you just need to know what you're doing. And I think this is just another really good alternative that people should consider,
So opportunity zone funds, they're a great way for partnerships or syndicates to invest to also defer capital gains, maybe a little bit different than 1031s. Maybe you could talk about that a little bit.
Yeah, well, so, one thing, and I discovered this the hard way, number one, a lot of times when people are investing as a group, which we've done this, and this is a very common way. You'll create an LLC, and you'll have multiple investors in the LLC, and you'll buy a building, or you'll buy whatever it is that this group of people buy together. And then all of a sudden, what a lot of people don't anticipate is what's going to happen when we need to exit this investment, and if everybody doesn't want to go do the same exact thing, right? Which we've had happen, right? Maybe you have 10 investors in a piece of property. You decide to sell the property. Well, not all 10 investors want to go invest in another piece of property together. Right. Everybody wants to then be able to go off and do their own thing.
And that's what they have to do to 1031.
You have to go off, and so there's, otherwise you have to season it, you have to pull it out of there. And so a lot of times, which can take time. Realistically, if you're going to pull something out of an LLC and put it into a TIC, again, I'm not a CPA, but
it's a 12-month seasoning
at
minimum.
Least, probably. And I know the hard way that you got to just be careful, and it's very gray around all that. But I think this is a good way, if you're in some sort of a syndicate or an LLC or something like that, where there's a liquidation event of one of your investments, and you either don't want to go as a group with your partners into another investment, and you want to figure out a way to be most tax strategic as you possibly can. I think that I can't think of too many better alternatives than doing something like this.
And one of the other benefits is, unlike 1031, or let me say it like this, one of the other benefits is that as a syndicate or a partnership, you don't have to invest the whole amount into an opportunity zone fund.
Right.
You can diversify it however you see fit.
Right. And to be honest, as we're going through all of this, I'll tell you, it is complicated. And I've been reading about it, and it's, and so, that's the part where, people, if you want to learn about opportunity zone funds, I think that this watching the video isn't enough. Like you and I were talking before, I put the blog out for you guys, and the reality of it is I've since met with probably 10 or 20 people that have read the blog, and they still don't understand it. Really, and it took me probably half a dozen times of having conversations and listening and watching videos to really be able to digest it. So I think it's important if somebody has the capital and they're really seriously thinking about doing it, to take the time to sit down with whether it be you or Morgan or Josh or whoever else on your team or whatever they're going to do, and really get their arms wrapped around exactly how it works, because it is a powerful financial tool, but you need to know what you're doing.
We see it similar to what 1031s were 25 years ago.
Right.
They came out, people didn't quite understand them, they had to really learn about them, and that process has been going on with Opportunity Zone funds over the last 12 months, especially with the clarity and really the sense of finality that came out with the April guidelines from the IRS.
Right.
That really seemed to give people a sense that now is the time that they can clearly understand what's happening.
And they can commit.
And they could commit.
Well, I kind of look at it too. I mean, and you can correct me if I'm wrong. I think I kind of look at the op zone investment like what you guys are doing is almost like a Roth versus a SEP, in a little bit, right?
Yeah.
I mean, because all that money is ultimately going to, if you hold it for the period, is growing tax free.
Right.
Right. So that's kind of a little bit of and you correct me if I'm wrong, a simple way to explain it to people.
I hadn't thought of it that way, but
it's a Roth versus a SEP, right? It's either after tax money, before tax money, and when you got to put it all in your spreadsheets and punch it out at the end and put in all your factors and all your tax implications and all of that stuff, and that's the best way to do it. But a guy like me, truthfully, I could, but it'd take me forever. But even then, I'm still going to go to somebody and have them sit down and help me show me the difference. If I take my, X unit building and exchange it into Y, and I do a 1031 exchange and do all of that, what's the implications going to be after 10 years versus if I do something like this? And just you have to do a side-by-side comparison and then just kind of, figure out for you what makes the most sense depending upon how involved you want to be in your investments, on a day-to-day basis, et cetera.
We'd like to thank our guest today on the Fireside Chat series, Tom Tognoli. Tom, thank you again for joining us. Really a pleasure.
My pleasure. Thanks for having me, Erik.
All right, thank you.
Take care.